On July 24th, while most Americans were grilling hamburgers and watching fireworks, President Trump signed into law what might be the most significant legislation since the Tax Cut and Jobs Act of 2017. Now I'm talking about the nearly 900-page One Big Beautiful Bill. And if you're a business owner, a retiree, or a high net worth individual, this legislation could fundamentally change your tax and estate planning strategies for decades to come. You see, in fact, I just spent the last 2 weeks diving into the legislation, and I discovered 5 game-changing provisions that could save you hundreds, even millions of dollars in taxes. But here's the thing. Most people have no idea that these opportunities even exist. I'm Nathan Crampy, and for the past 2 decades, I've been helping successful families like yours and business owners navigate the complex tax and estate planning strategies. And today, I'm going to walk through exactly what this new law means for you and your family and your business. And then more importantly, what you need to do about it right now. So let me paint you a picture. Maybe you're a business owner who's built a successful company over the last 30 years. Maybe you've been sitting there, stressed, thinking about giving away millions of dollars in assets by the end of 2025 to avoid what most people are calling the tax cliff. You see, you might have heard that the estate tax exemption was going to be cut in half in 2026, from the $13.99 million now back down to $6 million. But you were probably prepared for some very difficult decisions about your business and your family's future. But then the One Big Beautiful Bill changed everything. Instead of your exemptions being cut in half, it actually increased to $15 million per person. And that's $30 million if you're married. And here's the kicker. It's now permanent. No more sunset clauses. No more uncertainty. What a relief. And this is just the beginning. You see, the legislation didn't just fix the estate tax issue. It created an entirely new opportunity for you that other smart families like yours are already beginning to leverage. Now, I want to share with you 5 major changes in this legislation. And these are really good planning opportunities that you can go through. And I want to spend our time talking about these because where the real value lies. I'm calling them game changers. So let's dive in. Game changer number 1, the estate tax exemption. Now, this is where I want to start because the estate tax exemption, I'm calling it the revolution. This is the new exemption threshold because it's set at $15 million for individuals and $30 million for joint filers. And unlike the previous legislation, there's no sunset clause. This is permanent. So think about this and what it means for you. If you're married, you can now pass $30 million to your heirs without paying a single penny in federal estate tax. But here's what's really interesting. If you're in the ultra high net worth category, this doesn't change the fundamental strategy. You still need to be making lifetime gifts to remove future appreciation from your estate. But if your estate is in that $15 to $30 million range, this creates a fascinating new dynamic for you because it focuses more on the income tax planning and the preservation of what we call that stepped up basis at death. So rather than just gifting assets away during your lifetime, let me give you an example of this. Maybe you own $25 million in highly appreciated stock. Under the old rules, you have been scrambling to give half of that away, right? But now, you may actually benefit from holding on and letting your heirs receive it with a stepped up basis. And that would eliminate decades of capital gain tax. Well, let's move on then. Game changer number 2, the SALT deduction breakthrough. Now, I call this a second game changer because it's really what's out there right now for high tax states. Think California, think Minnesota, think Washington State, New York. These state and local tax deductions have been improved dramatically. So let me talk about this. It lifts that SALT tax a little bit more to $40,000 this year. But that benefit does actually phase out. It decreases for taxpayers that are over that $500,000 of income. And this cap increases 1% annually through 2029. And then it reverts back to that $10,000 mark in 2030. So let me give you a real world example here. Like I said, you're in one of those states that you pay higher tax. So $45,000 in state income taxes, $25,000 in property taxes. That's $70,000 in total. And under the old $10,000 cap, you could only deduct that $10,000. But now your income is under $500,000. You can deduct the full $40,000. So that's $30,000 in additional deduction potential, saving you $11,000 or more in federal taxes. But here's the strategic opportunity that you should be looking at: bunching the SALT payments in 2025 through 2029. You say, pay for your 2025 property taxes early, accelerate the state income tax payments, and maximize this benefit while it lasts. And if you're over the $500,000 income threshold, there's some sophisticated strategies of using the multiple grantor trusts and non-grantor trusts that might actually help multiply this benefit. Now, let's move on to game changer number 3, income tax rate certainty. This is the third game changer, and it's all about certainty. You see, President Trump signed a massive tax and spending bill and is implementing much of his domestic agenda. But the one most important aspect is that it makes the Tax Cut and Jobs Act rates permanent. And at 37%, it stays there. It's not going to revert back for the top line at 39.6% bracket. So these are the broader bracket ranges, the expanded standard deductions, and all of it is now permanent. No more sunsetting clauses. And if you know what this means for you long term, you see, for the first time in years, we can build a Roth conversion strategy, a charitable gifting plan, and trust distribution strategies with confidence. And that could really change your marginal tax bracket. You see, we are now building multi-year Roth conversion strategies, knowing that we can convert at these lower rates without worrying about a rate increase in 2026. So picture this: converting $200,000 per year over the next 5 years, and staying in the 24% bracket instead of potentially facing a much higher rate later on. That's the power. But not to be outdone, game changer number 4, the QSBS revolution. Now, the fourth game changer here is going to be huge for entrepreneurs and investors. It's the enhancement of the qualified small business stock, or QSBS benefits. You see, under these new tax laws, if you invest in qualifying small businesses, you can now exclude 50% of your gains after just 3 years, 75% of your gains in 4 years, and 100% in 5 years. And the lifetime exclusion cap has increased from $10 million to $15 million per company. And the asset threshold here for qualifying business has increased from 50 million to 75 million. So let me paint a picture for you. Maybe you're a tech entrepreneur who sold your company recently, and under the old rules, you had to hold your stock for 5 years to get an exclusion, and it was capped at $10 million. And if you were making that same investment today, you could start getting the partial exclusion in just 3 years, and potentially excluding up to $15 million in gains. You see, this is the game changer, right? If you're investing in or owning a small business, you should be reviewing your current QSBS holdings and looking at new investment opportunities that could qualify. It's huge. But the other part of it is what I'm calling game changer number 5. And that's the QBI deductions. You see, this is the final one that I want to be going through today. And it's the preservation and the enhancement of the qualified business income deduction, the 20% deduction for pass-through businesses. Not only is this deduction now permanent, but they've raised the income threshold from $50,000 to $75,000 for single filers, and from $100,000 to $150,000 for married couples. And they've also added a $400 minimum deduction for anyone with at least $1,000 of active business income. So maybe you should run a consulting business, and you're at that threshold there where your QBI deductions were being phased out. But now, with this higher threshold, you keep the full 20% savings and the thousands of dollars that come with it per year. Now, here's what I want you to understand. That these aren't just theoretical benefits. You see, these are real opportunities that you have, and they're available for you right now. And they require some strategic planning and some immediate action. So let me share something that might surprise you. In 2 weeks since this bill was signed, I've had a number of conversations with others who are basically asking the same question. What should I be doing differently now? And here's the truth. If you're a business owner, a retiree, a high net worth individual, and you're taking action in the next 90 days, you're going to be able to maximize these opportunities. But what if you wait? You may miss out on some strategies that could potentially save you hundreds of thousands of dollars. So think about it this way. If you're a business owner, like I mentioned earlier, you don't want to just celebrate these increases with the exemptions that are there. You actually want to completely restructure your succession planning. You'd set up a trust. You'd structure things to take advantage of the permanent QBI deduction. You'd accelerate some income into 2025 and maximize your self-deduction. You even look at your QSBS opportunities for the next generation. And these strategies, when they're done correctly, can save you and other families millions of dollars in taxes in just a decade. So when you do the math, that could be $2 million. And this is not theory. This is real money that can stay in your family and in your pocket instead of going to the government. But wait, there's more here as well. You see, this legislation includes several other provisions that create additional opportunities. And it creates a federal income tax deduction for both qualified overtime and qualified tips. So this is really effective not only this year, but it goes through 2028. And the workers can deduct $25,000 of tip income and $12,500 in overtime pay. So there's the new Trump account for children as well. For those under 18 in the tax advantage savings accounts, they can contribute $5,000 annually. And this Trump account is for every American newborn. It is part of his legislation that's really a new deduction. But there's also some for autos, for American-made vehicles, up to $10,000 per year through 2028. And each of these create planning opportunities for you. And if you're a business with tipped employees, you may actually want to restructure the compensation packages. You might want to set up Trump accounts for your children and grandchildren. You might even want to look at the timing of your vehicle purchase to maximize these auto loan interest deductions. And here's what's critical to understand. These opportunities are time sensitive. You see, the self-deduction benefits phase out after 2029. The overtime and tip deduction sunsets in 2028. The auto loan interest deductions expire in 2028 as well. And this means you have a limited window to maximize these benefits. And if you act now, you'll be among the best who do. But here's what concerns me. I'm not seeing a lot. I'm actually seeing more in confusion and misinformation about these changes. You see, I'm meeting with people and talking to people, and they're looking at the state tax exemptions. They think it may only apply to, say, farms. Or others believe that the SALT deductions were only for the people making under the $500,000. And these are misconceptions. So here's what I want you to do. If you're a business owner, a retiree, or a high net worth individual, you need to understand how these changes affect your specific situation. And I want to invite you to schedule what I call a second opinion meeting. Now, this isn't a sales pitch. It's an opportunity to get clarity on how the one big beautiful bill affects your taxes, your estate plan, and your overall financial strategy. And in this meeting, we're going to review your current situation. We're going to identify specific opportunities created in the new legislation and give a clear roadmap for moving forward. Look at your estate planning strategy, your business structure, your investment portfolio, your tax situation, and see where there's new opportunities that might benefit you. And like I've said, I've been doing this for 2 decades, and I've helped hundreds of families navigate these law changes. And it's the people who take advantage of these opportunities early are the ones who benefit the most. So here's what I want you to do right now. Go to our website, lionswealth.com, and really sign up for our second opinion meeting. And if you prefer, call us, because we'll get you on the calendar in the next few weeks. But before you do that, I want you to do me a favor. If this video has been helpful, hit the like button and subscribe to our channel, because we're creating a lot more content about these new opportunities, and I don't want you to miss any of it. Also, drop a comment below and let me know which of these 5 game changers is the most relevant in your situation. Are you interested in the tax exemptions, the self-deductions, the QSBS opportunities? You see, I read these comments and go through them, and I actually do create videos based upon your questions. And here's the bonus for you. I'm going to be creating a detailed guide that breaks down all of these opportunities with specific examples and action steps. And if you subscribe to our channel and comment below, I'll make sure that you get that guide as soon as it's ready. Now, there's a lot of information here. These tax law changes are big, and I want you to remember that these opportunities are real, and they're available now, and they will be there, but they're not going to last forever. And the one big beautiful bill represents some significant tax planning opportunities, and the families who take action like you are the ones who can benefit the most, and it's the ones who wait will be looking back years from now and wishing they had acted sooner. So don't be that person with regret. Be the person who takes action. So go to our website, lionswealth.com, click on the second opinion meeting, and let's get started to maximize those opportunities. I look forward to seeing you in our next videos. Take care.